Okay, 12 o'clock. Let's begin. Okay, so I'm going to go through a few questions. These questions on the screen. If you have any questions, please pop them in the chat box, and then we'll go through a live Q&A at the end. Now, so you'll know, I'm not some there are a few people here I'm not familiar with. So, in case you're thinking I'm some random YouTuber or talking head, etc., I do know what I'm talking about when it comes to gold and silver. About 8 years ago, I used to be one of the biggest gold and silver bullion dealers in the UK. I was in the top 5 for sure. But that sounds all very fancy, but I think it's like 80-20 principle. 80% of all the revenue for online bullion dealers in the UK pretty much go to the top 20%. So I was only ever doing something like between 120 to 150 grand a month in revenue. So as bullion dealers go, it's pretty low. But I know my stuff. And then eventually my own supplier took me out, and then I had to close that business down. So I'll explain that later. Now, this is going to be half an hour or so. I'm going to rattle through this. And for those of you who are short of time, what I'm going to do is I'm going to quickly give you really quick answers to these questions here, so that if you want to bugger off over the next 2 minutes, you can. God, I really got a frog in my throat. And then later on we'll go through each one of these in depth. So let's just get a pen out here. Let's get a dark blue. Right, so why buy gold and silver? Because it's awesome. Long story short, it's a good store of wealth, and it's not a bad there's pretty high probability that it's going to increase over the future. So that's pretty easy to get. What to get? So obviously you can choose between gold or silver. I would highly recommend going for silver. It's massively undervalued compared to gold, and if gold does its thing, silver always outpaces it. It outpaces it to the downside and also to the upside. And in terms of what type of silver to get, I would get coins. Not bars. Bars are easily faked. And the best quality coin on the planet, and one of the most well-known ones, is the Canadian maple leaf. So Canadian maple leaf, they are the best. So that's that. Checking veracity, so checking authenticity, basically, if it's real or fake. The easiest way for the average person to check it is to get really strong magnets. So go to Amazon, get some neodymium magnets. They're the strongest naturally occurring magnets. Neodymium, not that good at spelling, magnets. And basically gold and silver are chemically and magnetically inert. So if your bullion is attracted to these magnets, then there's tungsten in there, or iron of some sort. What to avoid? Basically avoid every and any type of MLM, network marketing type scam, gold trading type stuff, trading schemes, and also remote storage. So you'll see later that this is a biggie. A good rule of thumb is that if you can't hold it, you don't own it. So that's that. Where to get it? Any online bullion dealers are, or online or offline. They need to be official ones though. Dealers. And by the way, so you know, I have 0 affiliates with any bullion dealer. I make no money from this. The purpose of this video is really just to save me some time. I'm getting a lot of these questions. So where to store it? So you can either have a safety deposit box, but not in a bank. And it needs, if you do that, it needs to be in your hometown. Don't store it overseas, because the reason you have gold and silver is a hedge against uncertainty. If shit hits the fan and you're storing it in Zurich, good luck getting hold of your bullion. So have it, big yellow or whatever in your town, or home. Now I'll talk about that later. How and when to sell it. So you will then basically either be selling it back to bullion dealers, so basically where you bought it from, dealers, or the public, mainly the public. So a good rule of thumb of knowing when to sell it is when you see in the front page of the Sun newspaper, buy gold and silver. That give it a few months, that's when the public will start rushing in, and then you can sell it on eBay. When I was a bullion dealer, I literally had loads of people buying it off me and then selling it straight away on eBay for a margin. So that's the quick broad brush. So if you don't have time for the next half an hour, that is pretty much it. So let's move into some detail, and let's zoom out a bit because I've got a whole bunch of scribbles that I want to share with you lot. Oh dear. Here we go. So let's get into, oh my god. Let's just do this manually. Oh, I'm moving words now, that's not good. So this may seem like a bit of a scribble, but it will make sense as we go along. Just make sure I'm still drawing. Yep, I am good. So why buy gold and silver in the first place? So first of all, you have to understand that it's pretty much a deflationary asset. Now, when you're looking at investment or investing, a good rule of thumb that you need to understand is that you need to spend money using inflationary currency, and you need to store your wealth in deflationary assets. So what this means, so what I mean by this is that, in fact, let's start over here. So when I say something is an inflationary asset, or it's basically where the units of that thing, as in the supply, is increasing. So supply increasing. Now, it's a bit of a misnomer. You can't really have an inflationary asset because anything inflationary is therefore losing purchasing power or value / price. So really an inflationary thing. So a good example of an inflationary thing would be the US dollar, the pound, the rupee, etc. So basically currencies. That is an inflationary thing because the currency supply is increasing exponentially. So however, you can get non-inflationary assets. So what that means is basically an asset where the supply is not increasing. So a good example of a non-inflationary asset would be land. Land doesn't really increase, so that is a good non-inflationary asset. And a deflationary asset is where the supply actually shrinks. So gold, or actually silver, is a better example. And I could also argue that Bitcoin would be as well, somewhat. Now, it doesn't necessarily mean that the supply has to just be falling off a cliff. You can still have a deflationary asset that still increases in supply, but everything is relative, you see. So you have to understand with investing, everything has a seesaw of some point. So let's take gold, okay? So gold increases every year in supply roughly about 1.8%, which is about the same as human population. However, when you compare gold against the US dollar, the US dollar is rising a lot faster than gold is, so therefore gold can be seen as a deflationary asset. Now silver is actually a far better example of a deflationary asset because it's the second most used commodity on the planet. So whatever is mined, it's then used. I mean, I've got like what is this? Some sort of OnePlus phone. It's got about $3 worth of silver in here and a whole bunch of other rare earth minerals. Tablets have about $20 worth and so on and so forth. So yeah, it's the second most used commodity on the planet, and supplies are low. If I'm shaking, it's because I'm freaking freezing. I had this problem yesterday and I didn't learn my lesson. I've got a hot coffee here, so hopefully that'll warm me up. And I've just taken some pure vitamin B3, so I'm going to have a dermal flush soon. And I'm going to start vasodilating, and then I'll get pretty hot. But we'll see. Soon see. Right. So yeah, that's what I mean. So basically, going back to pure investing, it's really important that you spend your money on groceries and spending using inflationary things, i.e. the pound, but you store your wealth in non-inflationary or even better deflationary assets. And that's especially relevant today where everything, we will eventually over the next year or so year or two, we're going to enter a world of massive runaway inflation. Put it this way, they've done more stimulus or forms of quantitative easing in the last 2 months than they did during the whole of 2008 and 2009. To put that into perspective, it's ridiculous. So eventually when inflationary forces kick in, if there's just more currency supply and not that much silver, gold or Bitcoin, those deflationary assets go up in price. So people knock Bitcoin and silver and gold, but they're actually based on what's happening at the moment, they're pretty good, solid hedges. Also, gold and silver are the only really proven, this is the key thing, proven store of wealth over long periods of time. One of the differential things between money and currency is the store of wealth over long periods of time. A lot of people say Bitcoin is a good store of wealth. Well, it's only been around for 11 years. It's not tested. So yeah, it's just a hedge. It's a long form of wealth. So I guess if you're looking over a long period of time, you have you have bullion up here, which is the longest wealth preservation. And then if you look over if you narrow the time frame down to maybe an eon or two, or about an eon, then you'll see things like land, and then fine art, as in museum quality art. That's pretty much it. So the Colonna family is one of the oldest, richest billionaire families for about 930 odd years now, and they have the mentality of a third, third in bullion, third in land, third in fine art or museum quality art. So so therefore basically gold and silver is simply an insurance policy, or a call option against uncertainty. So it's basically saying that if you're buying gold and silver, you are taking a bet that in the future the world is going to get fucked up. So if it doesn't get screwed up, then you haven't lost anything, because you've basically just preserved your wealth. And if the earth does go crap, then guess what? Your gold and silver or Bitcoin will kick in as that insurance policy that will pay out nicely. And also there is a bit of a punt here as well. So yes, you have all the store of wealth and all that sort of stuff, but you also have this intrinsic punt, which happens roughly every 70 odd years. So I just looked at the chat box and Tom said it looks like I'm having a male menopause. No, I take vitamin B3, so vasodilates you, so all the nootropics I take actually get to different, all the parts of your brain. I take some nootropics, basically. So so basically every 70 or so years there's a re-evaluation in gold and silver. Well, gold mainly, but then silver, which is the sort of the younger brother, kicks it up a gear. Last time that happened was this is not the time to go into gold history, but we had the original gold exchange, gold standard, where for every $1 there was, or £1 in existence, there was £1 equivalent of gold or silver in the treasury. Then we had the gold exchange standard, where is a fraction of the currency was backed by it, and so forth. Then we had the Bretton Woods system, blah blah blah. But long story short, what happens is every now and again the world runs away with itself due to governments and politicians printing currency, blah blah blah, and they go, shit, we need to reevaluate the whole monetary system. And what normally happens is that they reevaluate, or they peg gold to a certain percentage of the currency supply. Now this video is not going to go into the pros and cons of that. I could equally argue that having some sort of gold standard is actually not that good. You either have a 100% backed currency system, or you don't have any at all. The moment you start doing little bits of it is a bit shitty. However, it's highly likely that we will have another reevaluation. And I think it's going to be in China, not America. It's going to be China. And the reason being is that China and Russia have been importing and buying more silver than any country has in freaking decades. It's one of China's closest guarded secrets, as in their official gold supplies, gold holdings. They've nationalised all mines in China, so nothing mined leaves the borders. They've set up a whole skeleton of shell companies around the world that buys metals, and then they ferry it back with military convoy back to the mainland. A few years ago, they bought the London Metals Exchange. They just love commodities. And the reason being is that it's highly likely they're going to back their yuan with gold. Now, here's the thing. They've always published their official gold holdings. And what we have found over decades now is that they lie. It's as simple as that. Every they've been caught lying probably once every 5 years about their gold holdings, and their holdings are always way more than what they previously admitted to. So here is this little, if you can look at this chart here, I'll zoom in a bit. So I've just drawn a rough chart of China M3. So the monetary supply, when you look at a currency supply, it's measured in 4 things: M0, M1, M2, and M3. So very broad brush speaking, M0 is all hard cash, or M1 is hard, in fact, I'm going to mute everyone for the moment. There we go. So yeah, M1 is all hard cash, or M0 plus stuff in your bank accounts. M2 is M0 plus M1 plus a few other things like credit cards and stuff like that. And then M3 is the broadest figure of your currency supply. So it includes everything, all debt, all derivatives, everything. So M3 is basically the proper amount of currency sloshing around in the world. So when you look at the Chinese M3, it stands as, well, I did these doodles yesterday, at $25 trillion. Okay, so that's how much yuan, renminbi, is sloshing around in the world. Now, let's be really conservative here. Let's say they back the yuan by 10% gold. Okay. Now, a lot of people say, "Oh, there's not enough gold on the planet to back a currency system." That's poo-poo. There is enough gold. All you have to do is you just change the price, and that's what's happened for thousands of years. Every time that there's been a accounting of gold, the price has just shot up to account for all the extra funny money out there, if that makes sense. So let's say China only did a 10% backing of gold. Okay, that means they need to effectively back $2.5 trillion worth of gold. As it stands today, their official gold holdings are 1,950 tons. I think that I call bullshit, but let's just use official stats. That means gold will then have to jump up to $1.28 billion per ton. So when you work that out per ounce, being really conservative, we're looking at something like $43,000 per ounce gold, which is freaking insane. Seeing as gold is, let's have a look. Let's look at gold. Today it's sat at just above $1,700. So that is a ridiculous amount. So whether that happens or not, I don't know. But as I said, it's a bit of a punt. It's happened many times in history. So yeah. And again, if you do it by 20%, you know, this figure gets nuts eventually. So yeah, so that's why you should have some allocation or exposure to gold and silver, and I would also add here Bitcoin as well, although we're not talking about cryptos today. Bit cheesy these days, but I'm a believer that Bitcoin is the modern day version of, it's digital gold, in my opinion. Whoopsie, I'm moving things. Control Z. Right, so let's move away. Now we need to have a look at what to get. Oh, Jesus Christ. So gold or silver? Everyone flocks to gold. Indians in particular. That's just part of their culture. That's fine. Persians or Middle East and I guess most of Southeast Asia love gold. I'm half Thai. Gold is big in Thailand as well. So yeah, it's but the thing is, I would focus on silver, and the reason being is because of the gold to silver ratio. Now, so as I said, everything, there's always some sort of seesaw. So here, if you look at this seesaw between gold and silver, this is what this chart shows. This just shows you basically how much more expensive gold is compared to silver. So here, if we look at this part here, let's call that, I don't know what, 96 over here. So what this basically means is that the gold-silver ratio is 96. So it means gold is 96 times more expensive than silver. Now, I couldn't actually find good, accurate charts for a bigger time period. This only went back to 1920. But the 5,000 year average, so the 5,000 year gold-silver ratio is between 12 to 17. So most people, if you look at most books, they say 15, but it depends at what time in history and at what part of the world. Obviously, some parts of the world that are more silver rich, blah, blah, blah. But 15 has always been the case. But even looking at recent times, what would you say the mean is? I know it goes up and down and it's a bit hard, but I would say probably somewhere around this green line. Let's say the average is something like this, 50 to 60. And as I looked at the price yesterday, it was 109. So right now, gold is massively overvalued compared to silver. Now you have to understand, silver always outpaces it. So in 1980, gold went up by 2,400%. Ridiculous returns, I know. But then silver went up 3,600%. So if you do, let's say gold is your only focus here, and you want to end up with as much gold, a bit like people wanting to get as much Bitcoin. It's like Bitcoin versus alternative coins. What you should do really is plow all in on silver. Literally go all in on silver. Don't even bother getting any gold. Because what will happen eventually is that this gold to silver ratio is going to come plummeting down to, let's say, 50, 60, etc. And then if you wanted more gold, then all you do is you sell your silver and convert it into gold. And you'll end up with more gold than you originally wanted. So that's the gold-silver ratio. So hopefully, yeah, that's why I'm more bullish on silver. Plus it has industrial application, whereas gold doesn't. Gold is hoarded. It's rarely used. So in form terms, avoid bars at all costs. Just honestly, 99% of all fake bullion on the planet is made in China. So China is the biggest exporter of fake bullion on the planet. They're also the biggest importer of real physical gold and silver. They are the biggest silver importers by far. But the thing is, nearly all fakes are done in bar format. And the reason being is that it's very easy to fake a bullion bar, because what you have to, all you do is you get a tungsten bar. So tungsten is the closest metal to gold and silver in terms of density and weight. Pretty much the same thing, or in fact they're not the same thing, but yeah. So if you wanted a 1 kilogram gold bar, you'd get roughly just under a kilogram's worth of tungsten, and then you gold plate it, and then it's up to you how thick that gold plating you want. Some people have just one layer, some people have, maybe a couple of millimeters worth of gold plating just so it can fool some tests. But yeah, don't buy bars. And another reason, if you're buying bars, it's really freaking hard to sell. So yes, it's okay with depressed prices right now, but like, let's say you buy a kilogram bar of silver. Okay, it may not be that expensive now, but let's say things do happen and we have that reaccountancy and gold and silver shoot to the moon. Now try and sell that bar. If you've got a bar of whatever metal and it's 100 grand, like, it's going to be freaking hard to sell that, and you can't chop it up, because yeah, the moment you degrade or you alter its form, it loses value. So that's why you really need to focus on smaller denominations. So this is, yeah, and so definitely avoid bars, because one, they're bulky, you only have one option. So when you're selling a big bar, you're hoping you're selling it to the right buyer at the right price at the right time. Whereas you could have, instead of a 1 kilogram bar, you could have 30 1-ounce coins. And so the reason why coins are not normally faked is because, let's say, a Canadian maple leaf or an American eagle or an African Krugerrand, they have set dimensions, set diameter, set width, etc. So even if you did try to make a coin of those dimensions with tungsten, it wouldn't be, it wouldn't have the same sort of thing. So yeah, I would focus on official 1-ounce coins, and as I mentioned, the Canadian maple leaf is the world's best quality form of bullion, because it's 4 nines as opposed to 3, so it's 99.99% pure, whereas the eagles will be 99.9%, same as the Krugerrands, etc. And before we talk about crockery, do not bother with old silverware, or like, it's bollocks. If you're investing in gold and silver, you need pure investment grade bullion. So some people I see are buying 92.6% pure stuff. Nah, not good enough. You're just going to get hammered on the resale value down the line. People want the pure stuff. So yeah, don't bother buying old-fashioned crockery. Yeah, so that's what to get. I mean, yeah, the maple leaves aren't the only ones that do 4 nines. I mean, there are others, but honestly, just buy a 1-ounce Canadian silver maple leaf and compare that with a silver Britannia, which is the UK Royal Mint version, or any others. The build quality is just sublime, and plus it's well known all over the world. So you could sell a maple leaf in any bullion dealer on the planet, whereas try selling a silver Britannia in Peru, like they're like, what? So checking veracity. Obviously weight and size is the easiest thing. So you have to understand that it's done in troy ounces, not normal ounces. So it's really particular. So what I would highly recommend is buying a little electronic scale from Amazon, a sensitive one for small weights, and simply weigh your 1 ounce coin. So if you've got like a 1 ounce, 1 troy ounce, like maple leaf or whatever, it needs to be between this range. So it has to be between 31.103 grams or 32.5. There are some, normally, even though it's 99.99% pure, there is that 0.001% impurity in there, iron, all that sort of stuff. So that's why there's it can sometimes be heavier. If it's even a little bit less than 31.103, it's fake. Honestly, you've got to be more sensitive to the downside than the upside. But if it's more than 32.5 grams, I'd be careful. I would then run different tests to corroborate or confirm. So that's weight and size. So yeah, so don't bother with bars. The ding test. Oh shit, I've got my silvers downstairs. I should have actually bought my silver up here, and gold. Shit, I've just admitted I've got bullion in my house to the public. It's not that much, trust me. So the ding test. So this isn't good for, if you're new to this, it won't make a difference. But when you ping a silver coin or a gold coin, it'll make this bing and sort of sound compared to like a 50p or a normal coin or a fake one. So my ear is tuned, yours may not be, so it's not the best test. So the magnet test is probably best for you. So get a neodymium magnet. Again, go to Amazon. They're really freaking strong magnets. And as I said, bullion is magnetically inert. So it should not be attracted or repelled at all. So I think for most people starting out, the weight and size test and the magnet test are the easiest ones. You then have a ceramic test. I've never really been a fan of that. You get a nice ceramic plate, and let's say you've got a gold bar or coin. You simply put some firm pressure onto the plate, and then you drag it across the plate. If it leaves any black marks, it's fake. If it leaves gold dust or gold trails, it's genuine. But if you have a fake bar or coin which is plated with enough thickness of silver or gold, it'll still leave that trail. So it's not the best test, plus it's a destructive test. I'm not a big fan of destructive tests. A test that ruins the form. Just like a drill test. I once had to drill, honestly I couldn't tell, and it was from a dodgy source, and basically I had to get a really thin drill bit, and I had to drill a hole through this 1 kilogram gold bar. I had to collect all the dusting, the shavings, etc. And it was genuine. But I said I like the devaluing of the drilling, I would pay that price. But yeah, so that's not good. And then you also have an acid test, so you can basically drop some nitric acid onto it and then look for the color changes. But yeah, I just wouldn't bother with these destructive tests. Just do the weight and size and the magnet test, and you'll be fine. But as I said, if you just buy official 1 ounce coins from their respective mints, you'll be fine. And what you'll see, if I'll just draw this better actually, if you buy, so they come in tubes, so it depends on what coin. You'll either get a tube of 20 coins or a tube of 25 coins. Most of them will be in tubes of 20, and they will be sealed, and it will have like a Royal Mint seal on it or Canadian Mint seal or whatever. But so you can do it like that, and I would always buy the tube. Don't buy like one coin on its own. First of all, it'll be a lot more expensive if you buy a single coin, because there's economies of scale when you buy gold and silver. But personally, I prefer just to buy a monster box. So when you buy a monster box, it comes directly from the seal. The mint. It will all be sealed. It'll be unopened, and a monster box is 500 ounces of silver. So yeah, either buy tubes, sealed tubes, or monster boxes. And there'll be big yellow boxes or green boxes. So yeah, so that's checking the veracity or authenticity of it all. So that's that. What to avoid? There's a lot to avoid. Basically, avoid any form of multi-level marketing scheme or network marketing scheme. There is zero point of having a middleman in the gold and silver world. There's already so many middlemen. The reason there's a massive discrepancy between the spot price and the physical price is because of all the middlemen. So here, if we're looking at gold is what, 1704 at the moment, $1,704. That's the spot price. Now, if you wanted to buy a physical gold bar, or let's say, let's just go to bullion by post. Used to be my biggest competitor. It's like the Tesco of bullion dealers in the UK. Basically, it's the biggest in the UK. So 1 ounce of gold. Let's just gold coins. By the way, gold coins will be slightly more expensive than bars. Bars are cheaper. That's why people flock to them. But yeah, look at this. If a gold Britannia is £1,524. So, and plus that won't be all the prices. There'll also be shipping prices, etc. But yeah, there is a discrepancy because there's so many middlemen. You got the gold explorers and the miners and then the refiners and then the people that sell the bullion from the miners to big wholesale buyers, etc. Then you got your wholesaler and then you got the bullion dealer. There's like at least 5 middlemen before you from mining it to having it in your palm. And then if you add an MLM, Jesus Christ, that's just an extra middleman, except they are the most expensive. Like, you will be buying ridiculous forms of silver with like a 20% markup because the MLM company needs to make a profit. And they'll disguise it. So they'll be like, hey, do this 50 quid a month thing, you'll get loads of teaching, blah blah blah, and these special coins. It's pure and utter bollocks. So I would stay well away from okay, before I get sued by anyone, let me rephrase this. It is my personal opinion hat on, my Siam kid opinion, that carrot bars is shit. Any form of I'm just gonna leave it like that. Any MLM in the gold space, run away. Same with cryptos as well. Avoid MLMs in the crypto space. There's no need for middlemen. You don't need them. Just go to an online bullion dealer and buy the freaking physical stuff. Okay, don't get bars. They're harder to sell in the future. Plus, could be fake or high probability of being fake. And numismatic coins. So a numismatic coin is something where it has an extra perceived value. So when Diana died, Princess Diana, there was shitloads of Princess Diana commemorative coins, etc. And so yeah, they may be 92.6 or 99.9% pure, etc. But you'll be paying through the nose for the numismatic value because England got to the semi-finals of the World Cup coin, or they make a coin for everything. There'll be Corona coin before you know it. Don't buy it, by the way. So, and for example, like let's say let's say a silver coin like a maple leaf or American Eagles, 15 quid. You can have a 1 ounce numismatic coin and you'll be paying like 50 quid because it's a fancy new coin from the Royal Mint or whatever. So avoid them. Yeah, avoid any crypto-based schemes, as in gold crypto-based schemes. Like there's all sorts of cryptos which are trying to be backed by gold, etc. I would be very. In fact, any crypto project that comes along that says, hey, we're going to take out the modern day monetary system and we're going to do it by backing up this crypto token by gold or silver, run away. Like Zuckerberg is trying to take out the modern day monetary system with his Libra project and he's having massive backlash. So if Zuckerberg can't do it with all of his resources, a poxy little crypto project that has raised 1 million quid is not going to cut the mustard. Basically, if a crypto-based project that is going to be backed by gold or silver, for that to work, you'll need at least a bare minimum of 100 tons of bullion to back up that crypto. Bare minimum. Put it this way, the UK, one of the biggest countries in the world, economically speaking, has about 144 tons of gold. So you basically need, and France is about the same, so you need an amount of gold comparable to a developed nation in order for this crypto gold-backed thing to work. It's not going to happen. So I know I'm being very negative here, but I'm doing that for a reason, because if you just listen to these avoid points that I'm saying right now, it's going to save you thousands of pounds. Yeah, avoid any trading schemes and African gold dust. Honestly, I used to get emailed every day by, hey, I've got 100 tons of gold mining dust or gold ore, but no buyers and blah blah blah. Would you like to be the beneficiary? You know, like those Nigerian scams. You won the lottery. And stored bullion. Okay, this is going to be a sensitive issue. A lot of people are going to probably disagree with what I'm about to say here. Do not invest in stored bullion. Remember, one of the reasons you're investing in bullion in the first place is because it is a hedge against uncertainty. It's a hedge against the world shitting its pants. And so if the world shits its pants and you have your bullion stored in Zurich or a Brinks deposit somewhere in another country, guess what? You will not get delivery of it. And if you want to be scared, Google MF Global. This used to be the world's biggest bullion bank, and it went bust, and everyone lost their money. And it still, to this day, people still don't have their gold or silver or even a financial reimbursement of their holdings. Gerard Celente, so spelt Celente, he's a major, he's a mainstream, he's a popular economist. I think he lost something like $250,000 worth of gold stored in MF Global. And just going sideways, here's why stored bullion is pretty dangerous. I'm going to use a red pen for this. Where's red? In fact, no, just change the color up here, can't I? Because you have allocated and unallocated. So you have allocated and unallocated. So allocated storage is basically you buy, I don't know, $100 worth of gold. I can't draw, so hopefully, yeah. And what happens is the person or the company you've bought this allocated gold, they take that gold coin and they put it in a box with your name on. And that is your gold. No one else can touch it. You own that. Unallocated gold or silver is where the company will have a big pile of gold or silver, and then people can buy little chunks of that. So it's not allocated, but people just buy little chunks of it. And what you'll find is that most ETFs, so exchange traded funds, so if you look at like SLV, GLD, so all these ETFs where people trade gold and silver, these funds, they're not that well backed. So I don't have up-to-date figures, but basically, like with things like this, it's a bit of a Ponzi. So there are some gold and silver ETFs out there that for every ounce of gold or silver they have in their vaults, they've sold that same ounce of silver to 50 to 100 or to 100, between 50 to 100 different people. So when shit hits the fan and everyone starts demanding delivery of their bullion, you'll have like 50 odd people thinking they own the same ounce of silver or the same ounce of gold. And so there'll be there'll be a run on these bullion banks, and they'll default. And what they may do is go, oh, actually, we can't do delivery unless you pay extortionate delivery fees. How about we reimburse you via cash? We'll do a cash settlement. It's not that good. So the reason people love stored bullion is because it's cheaper. Yeah. So what a lot of MLM things do is that you're buying bullion from an MLM company or whatever. They're storing it for you at relatively cheap prices. But if you ever want delivery of it, they'll then put like the biggest delivery charges on it. Like it's ridiculous. Or you'll just never get delivery of it. And there are some MLMs out there where they're selling gold and silver and they have zero bullion to back it up. It's just ridiculous. So yeah, make sure, and if anyone claims that they're fully backed, they need to prove it by having a third party auditor. Or even better, I mean, if I was a bullion bank and I was claiming I was 100% fully backed, I'd get one of the biggest accounting firms in the world, like Price Coopers. Oh my god, I'm having a mental fart. I can't think of any accounting firms. Sorry?
PricewaterhouseCoopers.
Yeah, yes, PricewaterhouseCoopers. I get basically a big accounting firm to do a third-party quarterly audit, and I'll just put a freaking webcam in the actual vault. Like, it doesn't hurt, does it? Like, here is our vault. Here is all of our gold and silver. Here's the webcam. Done. It's simple. But no one does that, and I wonder why. So I've got this coffee. I don't want it to get cold. So, rant over. I'll chill out a bit now. Where to get it? So again, I have no commercial affiliations. I used to have 2 billion businesses. One I went bust, and one I sold. As I mentioned, so I'll tell you the story after this. So physical bullion shops are good. So you can either go to Hatton Garden. There's gonna be let's get rid of the red. There's gonna be loads of bullion stores in Hatton Garden. It's like the bullion and the crystal diamond place of the UK. And also Atkinson's Jewellers. So Paul Atkinson is a jolly nice guy. He's based in Sutton Coldfield near Birmingham. So Paul Atkinson. It's called Atkinson's Jewellers. So he's a really nice guy. He's been in this business for a long time. If you're watching this, Paul, hello. He was actually my first supplier when I became a bullion dealer, and then I needed more supply. So I then went to CoinInvest. So CoinInvest is Europe's biggest wholesaler, based in Germany. Daniel Marburger is the director there. He's a jolly nice guy as well. And yeah, as mentioned, Bullion by Post was my biggest competitor. So they are like the Tesco, the Amazon of the the UK bullion world, and I'd always be competing against him. Rob Halliday Stein is the CEO of that. So yeah, I would basically, if you want to buy gold and silver, go to any of these people. Go to Bullion by Post. It doesn't matter. All you need to do is just compare the prices, and I wouldn't necessarily be loyal to any of these shops. Just go by the price. And sometimes some sites will even let you lock in a price for an hour or so, which you can abuse. I had a lot of people abuse my system. So I had you could lock in a price with me, and I stupidly, or I did it on purpose really to attract more customers because I wanted to get traction. You could lock in a price with me for an hour. So what happened is that people were locking in prices just willy-nilly. My website used to get shitloads of hits and orders, fake orders, and then what would happen is people would just wait an hour or 50 odd minutes, and if the price went down, they'd then buy. If it went up, if the price went up, then they'd buy at the lower price, and vice versa. So I wasn't really fussed, because I was also trading gold and silver. I was hedging via trading, so I wasn't really bothered. So what happened is that CoinInvest was my wholesaler, and I was doing really well. Well, I say really well. I was only about 2 million revenue a year, something like that. But all of a sudden, CoinInvest started selling gold and silver VAT free into the UK. So using a whole bunch of loopholes, you could buy gold and silver VAT free. Whereas in the UK, I'd have to charge VAT, so you're 20% underwater before you start. And so when this happened, I was like, oh, Jesus. I just looked at the comments. Yeah, Chards in Blackpool are also good. I mean, there's loads out there. Chards has been around for a fair while, actually, so Chards are good. Good, honest people. So, but yeah, I just couldn't compete. So yeah, I would literally just check out CoinInvest. So what I would do, as I said, don't be loyal in this particular aspect. If you want to buy a 1 ounce gold Britannia, just compare that price to Bullion by Post. Yeah, and here's the thing: never, ever buy from Amazon, eBay, or Gumtree, or China. Okay, you're asking for trouble if you're buying bullion from China. It's going to be fake, 100%. So it's probably actually worth going to Alibaba and buying some bullion from China, just so you can see what a fake coin looks like. Some of them are quite good these days. But here's the thing: later on down the line, when the Johnny come lately comes in, as in the public, who always come in at the wrong time, at the wrong place, etc. Guess where they'll be buying from? They will be buying from eBay and Amazon and all that. So you'll just offload it to the dumb public. So, well, sorry, not the dumb public, the uninformed. I mean, in the world of finance, money is always, or wealth is always transferring from the uninformed to the informed. So by being here today, you're being informed. So pat yourselves on the back. So where to store it? This is interesting. So you can either store it at home, and if you do that, be creative. So, well, it's like Fight Club. The first rule is tell no one. If no one knows that you own Bitcoin or silver or gold, no one will come looking. So just don't tell anyone. You don't need to shout on Facebook, here's my monster box of silver, or whatever. So yeah, just don't tell anyone and you'll be fine. So you can store it at home. You could be creative. So you could, I've seen all sorts of different things. You could basically get you put it in a freezer. Get an ice cream tub, put all your bullion in the ice cream tub, put it in the freezer or a deep freezer. Some people put them in fish tanks, like under the pebbles, or even as ornaments. I know one farmer who bought like bought about £800,000 worth of gold bars, 1 kilogram gold bars, and he uses them as doorstops. He painted them all black, and he has them as doorstops all around his house. You can bury them. If you're going to bury them, bury it deeper than 6 feet. So I think off the top of this is old knowledge now, so I need to fact check this, but the last time I checked, the world's best metal detector only went down to about 6 or 7 feet. So if you're going to bury it deeper than 6 or 7 feet. Don't bury it near a river. I heard of a case where someone buried it near the side of a stream in his house, or a river in his house, went to retrieve it and it had disappeared. Water erosion had just like eroded it away, got to it, and then just put it downstream somewhere. So yeah, you can be creative. So that's if you're at home, or if you're going to have a lot and you're not oh, by the way, don't worry about fire as well. So gold and silver has a melting point between 950 to 1100 degrees Celsius. And the average house fire will hit probably between 500 to 600 degrees Celsius. So yeah, it's not going to melt, don't worry about that. Or you could just get a vault, like a safe. So in fact, if you do have a safe, it's worth getting 2 safes. So have a decoy safe and a proper safe. So you could have, let's say you don't have a cellar, let's say you have an attic. I would perhaps have your proper safe bolted into the floor, but it, really well hidden. And then have a decoy safe, something which is obvious, like in your bedroom, or hell, in the attic, but like in the middle of the attic or something. And then have a few bits of coins in there. So yeah, but again, if you tell no one, no one's going to be, yeah. So now, safety deposit boxes. If you're not comfortable with having it in your home, get a safety deposit box, but not a bank. Okay, there's been so many cases of safety deposit boxes going missing from a bank, which is nuts. There's all sorts of ongoing court cases about that. And quite weirdly, sometimes it's the ones with jewelry and gold and silver that go missing. Interesting. So what I would do is, go to, like when I used to live in Leicester, I used a company called Mint Securities. Again, got no affiliate links, but yeah, I would just have it in your own town. So if you live in a town, just have it in, Big Yellow or whatever. And you can, and in some of these safety deposit boxes, you can get them insured. So I think when I had mine in my deposit boxes, I think I paid something like £200 a year for £100,000 insurance or something like that. Yeah. So, and also when you're doing that, you basically own the heir of, or you own the box. So if the company went bust, it's your property. You have the deeds to that box, so to speak. So it wouldn't go missing in administration. So that's that. Okay, how and when to sell it. Right, so this is interesting. So again, where to sell, or in fact I should add in how and when plus where to sell it. So let's start with the where. You'll be selling it back to online stores, so i.e. the bullion dealer that you bought it from, maybe. But mainly it's going to be the public. But here's the thing. If we just skip down to here, maybe don't sell it. As in, never sell it. Just like with my Bitcoin, when I finally get my full holdings in and whatever, I will never sell it. So if you want to realise some inflationary currency from it, i.e. if you want to crystallise or you want to get some cash from it, I would lend from it. I would borrow against it, sorry. So in the future, let's say gold and silver does its thing and it goes through the roof. You don't really want to be selling that. I would basically have it and then borrow against it. That's what I would do, and just pay, a small APR to get it's just like a mortgage. A lot of people use their mortgage as a bank account with really cheap money. So if you can, take out 50 grand against your mortgage, that's really cheap, isn't it? Like you'll be paying 1, 2, 3%, compared to a bank where they'll fleece you of 20% or whatever. So sell it on eBay. But yeah, you have to wait till the public hype. You have to wait till the average bloke that goes to the pub starts going, I need to buy some gold and silver. And we saw that sort of a little bit of that hype when Bitcoin in 2017. But I guess when every taxi driver goes, you need to buy some gold and silver. I just quickly saw a question: who can you borrow against? You can probably go to a bank. I mean, I don't know at the moment, but there will be people out there that will borrow or lend with the gold as security. Banks, bullion dealers, people with liquid, people that lend money basically. But here's the thing: this is something which not many people are aware of, and it's the house to silver ratio, or house to gold ratio. And for me personally, I'm looking at this. So if you want to find a good time to sell, you have to look at these charts over here. So let's zoom over here. Oops, my pen's disappearing. So let's look at the silver ratio. In fact, if any traders are here, what pattern is this showing? This is showing like a pretty weird or interesting sort of head and shoulders here. Shoulder, head, shoulder, neckline, crash. Anyway, but let's get rid of those scribbles. That's going to confuse me. It looks like a penis if I lift it there. So let's look at this one. So what this chart shows you is the house price to silver ratio in the UK, going back to 1953 till now. So what we're seeing in the UK is that basically, let's have a look. Okay, this. If you look at other charts, you'll find that roughly 800 ounces of silver is the average for a house. So basically, in fact, this chart doesn't go back far enough. The previous charts it goes up to this level, but if you look back long enough, you'll see that 800 ounces of silver historically equals an average price house outright. But let's just ignore that. Let's completely ignore that and just look at this chart in recent times. So what we're saying is, if we look at the mean, what is the mean? Like, we have this line over here, but obviously it goes a bit crazy because house prices go nuts. But what you can see is that, okay, let's say house prices are overvalued to silver at the moment, and let's say use this 8,000 figure. So what you could do is go, right, when the
leaked as well.
I'm just going to mute. Is that basically when this house to silver ratio? Actually, this doesn't make sense to me. 1 second. So 250 divided by 8,000, 31. No. Okay, I think latest. Okay, you could do that. It seems a bit high. Basically, what it's saying is that if you right now, it's saying that 16,000 ounces of silver equals a UK average price house outright. Now, that's obviously quite high. And down here, if you use this 8,000 level, that basically works out like if all I did was £250,000. I'm not sure of the average house, but let's say it's 250k. In fact, let's just double check that whilst we're here, because this is going to be recorded. Average house price UK 2020. 230. Okay, so if you get a calculator and do, whoopsie, where's my calculator gone? over here. So 230 divided by 8,000, 28.75. So what this chart shows you is that, you know, it gets back to this sort of mean or this average level at 8,000. So when you can sell your silver for, call it £30 per ounce, that is a good time to convert your silver into a house. So personally, I'm not going to do that. I prefer to use historical averages. So if it gets around the 800 or 1,000 ounces for a house, then yeah, I'll probably most likely sell. But I think this, yeah, with things like gold and silver, you need to look at the bigger picture. And going back 50, to 1953 isn't long enough. But here's the thing: this doesn't necessarily mean the price of silver goes up or down. This is another seesaw. Remember, you've got to be obsessed with seesaws. So what could happen is that house prices could remain flat and silver goes up, and then this ratio will then go down. Or what could happen is house prices just fall through the cliff and silver remains constant, or it could even go up. I think what's likely to happen in the long term is that house prices are going to never recover. Again, look at my previous property articles on LinkedIn or YouTube and you'll see why. I think basically UK will equal Japan. We are literally doing exactly what Japan did in 1990. And Japan's never recovered, ever. So I see that's happening in the long term, especially with 3D printing, blah, blah, blah. And I think gold and silver will do this. So I think this is massively going to overshoot. And yeah, when we get down to about 1,000 ounces, I'll quite likely convert that to a house, or however many ounces I've got. So that, as I said, it's all relative. So yeah. And that, ladies and gentlemen, was supposed to be half an hour, and I have gone on. It's 57 minutes now, 56 minutes. Let's see if I've missed anything. Let's zoom out a bit. I think that is everything. So what I'm going to do now, we had a lot of questions in the chat box, so I'm going to go to the beginning. And yeah, so by the way, there's 70 people here, so I really do value your time, so thank you for sharing an hour of your time here today. Hopefully it's helped and it's made sense somewhat. And yeah, let's go through these questions. So, first of all, okay, Hadley, what makes a silver Canadian maple leaf better than a silver Britannia? Both claim they're no. So a Britannia is 99.9% pure, a maple leaf is 99.99% pure. And also, if you just first of all, a maple leaf is actually more well known on the planet than a Britannia. Britannias are really only, have any value in the UK because it's CGT free. Oh, by the way, yes, that's something. The silver Britannia and the gold Britannia is capital gains tax free. So if you're going to buy a shitload of gold and silver, yeah, then perhaps put it in Britannia format because it's legal, UK legal tender. And also, I shouldn't probably say this, it's actually a really nifty inheritance tax workaround. I wouldn't say dodge or evasion, but if you take a 1 ounce gold coin, a 1 ounce gold Britannia coin, it has a face value of £100. So just think about this for a moment. You could basically, if you're in a position where you're worried about inheritance tax and the government stealing 40% of your wealth on handover, you could buy shitloads of 1 ounce gold Britannias, and they have a face value of £100. So let's say they moon in the future, instead of passing down, thousands of pounds worth, hundreds of thousands of pounds worth of gold, you're passing them down. Basically, here's £100, here's £100, here's yeah. So that's a valid way. So the maples are just better. Also asks if CGT free status. Oh yeah, sorry, just answered that. B3 is niacin. Yeah, it's niacin acid. Looks like I'm having mail. You just get all hot flush. I haven't actually had the blush yet. I don't know why. Regarding maples versus Britannia, I think Britannias get CGT free. Yep, it is. But it depends. Like, you all have a CGT allowance. So what is it this year? Is it 11, 12,000, 12,500 CGT allowance? Just double check. 2020. I think it's 12.5. No, 12. It's always going up. So yeah, if you're gonna buy, so for those that are buying like 20 coins, it doesn't matter. You don't need to worry about Britannias. If you're going to buy in bulk, yeah, in the UK, then maybe Britannias. But if you're never going to sell, it doesn't really matter. So that's that. Which new... Now is not the time to take nootropics. They're mushroom-type nootropics, basically. Is China buying silver too? They're the world's biggest hoarders, buyers, and importers and miners of silver. They love silver. Good effort on the visual background. Yeah, some of you noticed it's my silly background. I need to make another one soon. Speaking of fake and real, do you see a market to buy secondhand if you're able to do the process of validating authenticity? Yeah, if you're confident in spotting a fake from a genuine one, then you can buy secondhand. Yeah, and sometimes you can get a good bargain doing that. Actually, in fact, I have old clients that are trying to sell their gold and silver now. I keep telling them, don't sell now. Honestly, this isn't the worst time to sell. We're in a buyer's market at the moment, not seller's market. So. But yeah, there are loads of people who, like I bought all my silver back in 2012. I haven't bought any since. So a lot of people that were also buying in 2012, 2015, whatever, they feel like they're massively underwater because gold and silver has done nothing over those years. But remember, if you need to get into gold and silver with a longer mindset. So yeah. So I'm really not fussed. I've held my bullion for about a decade and not much has happened because I'm in this for I'm in this really for the punt. I'm in this for the gold reaccountancy. So when China basically gives the middle finger to the US and backs the yuan, that's when the dollar dies. And also what will happen is when shit hits the fan. Oh, so here's another thing which. This is actually really important. So let's get rid of the chat box. Let's zoom into over here. I see a COMEX default inbound. I really do. So what I mean by COMEX, so the COMEX is the commodity exchange. And at the moment, the world's commodities are basically the COMEX is basically US based. So the world spot prices for gold is the GLD ETF, silver is the SLV ETF, etc. And they are not fully backed by a country mile. So what's going to happen when gold and silver does this and the economy does this, a lot of people will be demanding delivery. They will be literally saying, hey, I want delivery my bullion. And it's not just retail. You'll have big billionaires and millionaires and funds and institutions going, hey, I want to take delivery of my bullion that I own. But they won't, so they'll crash. It'll be basically like a run on the banks, but it'll be a run on the COMEX. So it will crash, and what will happen is that SLV, GLD, or basically anything paper, so do not buy any forms of paper, gold and silver, i.e. electronics, so like ETFs, etc. What will happen is that the COMEX price will crash to zero, I reckon, and then the global spot prices will shift over to the Shanghai metals market. So all of a sudden, you'll see this run-in on the COMEX, it will crash, and then China will own the whole COMEX market. So that is what this is. Yeah, do not buy paper, gold or silver. It's absolutely pivotal. You understand that. I sold a lot of old silver last year. Shocked how much. Probably let it go cheap. Yeah, a lot of people have been selling, but yeah, you can still buy now. Basically, it's a hedge against the world going nuts. So the world will go nuts. GDP is going to be probably by the end of this year minus 30% at least. And like if you look at all previous crashes, in fact, just a bit of research for you to do in your own time if you're ever bored. Look at what the GDP decline was in 2008, 2001, all the big crashes, and then compare it to the GDP decline that we're estimated right now. It's ridiculous. Look at unemployment. It's like 40 million people have been made jobless over the last 2 months. It's nuts. Anyway, gold, this is what we're saying, silver being low versus gold. Yeah, so the way you work out the gold-silver ratio is basically you take the price of gold, so right now it's 1703. So 1703 divided by the price of silver. So you just go to silver. What is silver? 1552 divided by 1552. So right now, gold is 109.73 times more expensive than silver. So that's what the gold-silver ratio is. So what will happen is that when gold takes off, silver will just massively outpace it. Silver went from like $3 to $50 in 1980. It was nuts. So that's that. Thought we didn't have any gold left after. Yeah, no. Brown, what an absolute twat. Sorry, it's a bit harsh, but he sold half of England's or UK's gold reserves at the worst possible time. I don't know if this chart goes back far enough. I'll show you when he sold it. If we open this up here, look at the weekly chart. Zoom out. 2000. So I think it was here. Wait, I think it was in 1993. Let's double check that. So Gordon Brown sells gold. 1990. Between 1999 and 2002, yeah, the Treasury sold 401 tons of gold out of it. Yeah, he sold all of that. So between 1999, okay, I was a bit late. So 1999, you couldn't make this up. Look at this. Basically, Gordon Brown sold 400 odd tons of gold there. And then what happened? Oh, cheers, Gordon. You've literally destroyed the UK. So that is Gordon Brown's epic market move. I can't even scroll. Yeah, that's where Gordon Brown sold it. Not that wise. So he's basically lost out on a fortune. Oh, he screwed us over. So if maple leaves are not available, would you say Australian kangaroos? Yeah, kangaroos are good. I would actually then default to the American eagle, just because they have they are the biggest in demand. So more American eagles are sold throughout the world than any other coin. So I would then go leaf, eagle, then Britannia, or depending on volume, obviously. What's your opinion on Peter Schiff, one of the world's most famous economists, blah, 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 also sells storage. Is he a scam now? No, so please don't misconstrue what I said. What I'm saying is that you have to understand this is what to avoid, stored bullion, because it's an insurance policy and you need access to your like as I said, just Google MF Global, the world's biggest bullion bank. It went bust. Peter Schiff can go bust. I'm not saying he's a scam. I'm saying he is a very good economist. He does know his stuff with gold and silver. He does know a lot about the macroeconomic world, and I agree with about 95% of what Peter Schiff says. Where I massively disagree with him is his view on Bitcoin and cryptos. He does not understand crypto at all. Yeah. So, but yeah, I agree with Peter Schiff on friggin' everything other than crypto. But he's not a scam, no. I'm just saying it's foolish to store your bullion in a place you have no access to. If he's fully allocated, that's great for him and for you. Paul Atkinson, Sutton Coldfield, yeah, he's good. Yeah, we talked about all the dealers. But in my post seems to be out of stock on most things. Yeah, everything is out of stock now. So what you'll find, I used to find this when I was a bullion dealer, is that when the market crashes, so it's weird. So when gold prices go down, bullion dealers are very, very busy. So it gets really freaking busy. And I used to have a next day delivery. Next day delivery. And most bullion dealers probably have next day delivery. But then when these crashes happen, my supplier got obviously clogged up. And so it went from like 1 day delivery or next day delivery to like 2 to 3 week waiting list, which is just nuts. And so at the moment, everything popular is sold out. So, whoopsie. That's that. You might look dodgy digging 6-foot holes in your garden. Just video yourself doing it so you got proof. Depends how big the wife is. Yeah. Who can you borrow against? there will be people out there. Just like right now, people are borrowing from and lending with Bitcoin. Would you lend against physical silver you hold personally? Not at the moment. I may in the future. Head and shoulders. Yeah, nice one, traders. So the real peak in house prices was in 2004, and what we've seen is mainly due to currency devalue. So that chart, remember, is not house prices in sterling. Where is it? It's down here. This is the peak of house prices against gold and silver. So that is where the peak was, not in pound sterling. I think the pound sterling, I don't know when we peaked, but yeah. But relative to gold and silver, that is when the peak. And it's all about Kondratiev wave cycles. Has anyone heard of Kondratiev cycles? So what, basically, most assets are somewhat correlated. So you have things like this. So historically, I'm not saying this happened. Oh my God, I can't draw. So a Kondratiev wave cycle is basically when you have two assets which are linked. So I prefer Kondratiev cycles when you're looking at polar opposites. So historically, let's move this away from everything. 1 second. So let's just drag this away. Oh my Lord. In fact, you're just gonna have to make do with that. So basically, oh no, this is shit. Let's just rub this all out. Historically, gold and silver, or bullion, used to be inversely correlated to gold and to stocks. So if you have your Kondratiev cycle like this, so let's make this better looking. You'll find that gold and silver, so bullion against stocks, move in 20-year cycles. So gold and silver basically made its low really around 2003, and that's where we had a relatively high in stocks. So stocks peaked in 2001 for stocks, and then for 20 odd years stocks, well, yeah, so this is, I think, recent times it's yeah, in fact this is happening pretty well actually. So I'm expecting so for 2020, yeah, pretty much 20 odd years, maybe 2021, we'll have a low in stocks, and then we should have a relative high. So this is when you compare stocks versus gold, let's say. Not price, we're ignoring pounds, it's nothing to do with pounds or the dollar, etc. And it's likely to see that gold and silver will hit a relative high, probably around 2020, 2021. And then gold and silver will then do nothing, and then it will then have a low around 2040, and vice versa. So this is why, and it happens with property, it happens with all sorts of different cycles out there. So the trick is not be fixated on any particular asset, and you need to basically exit overvalued assets and then plow into the undervalued ones. So like in stocks, it's best to then get out of stocks and then plow all of your money into bullion relative to stocks. So then you can then effectively grow and exit this linear or this sideways moving. I can't draw it. I think you probably yeah. So instead of going if you stayed in stocks, you basically be going sideways. And the reason people think that they're making money is because really because of currency valuation in printing, the Kondratiev cycles look like this. And the reason people don't understand that, my stocks are going up, my property's going up, yeah, well, no shit, because currency supply is being printed at this rate, so it masks everything. So this is how you do it. So you exit stocks up here, you buy bullion down here, so then eventually you break out. Then you exit bullion up here, you then buy stocks down here, and then that is the true path to wealth. So that's okay. So watch Princess of Yen recently. No idea what that is. I'm sorry. How about sending it back to CoinInvest, for example, via UPS Safe in your experience? I have done it. Takes a long time. And UPS are shit. That's the one thing I've always hated CoinInvest about, is if you buy from CoinInvest, they deliver it via UPS. And I've had probably 3 occasions where the UPS delivery person has literally just dumped a monster box of silver on my doorstep unsigned. And I've come home like, what the That's 500 ounces of silver just dumped on the doorstep. That was like years and years ago. So I don't know if they've improved since then, but that is what that used to happen with me. Wondering about profits and taxes of bullion. There's no CGT free if you get the Britannia. Should we be buying silver if we're in the wealth generation stage? Nope. So that's interesting. Not everyone will get this. Stephen's a student of mine. We talk about wealth generation and how basically I am of the opinion that we are in 2 stages of your life. You have your aggressive wealth generation phase of your life, and then you have your wealth preservation phase of your life. So the things that you need to be doing, if, by the way, you want to breach this chasm, and this chasm is called financial independence or financial freedom. If you want to breach this chasm, you need to focus on your wealth generation phase. And so you need to be doing things like running a business, or basically focus on your cash flowing assets, or build up a property business empire, whatever. But it's basically via business, that's how you get over here. And then when you're wealthy and you want to preserve your wealth, then go into gold and silver and stuff like that. So if you're in this stage of your life over here, I would make sure that you focus primarily on business and cash flowing assets, but also have exposure to bullion and also to crypto. I'm just going to put Bitcoin because it's the only safe one at the moment. And the reason for that is because just in case bullion does get reevaluated to $40,000 an ounce and Bitcoin hits 100k plus, it's just a bit of a punt at the end of the day. Part of your risk capital, but focus on business. What tracker should one consider in a SIP pension when not possible to buy physical? Well, it's always possible to buy physical. Just go to bullionbypost.com and buy physical. But if you have a SIP, so I used to have my SIP in a gold tracker. So which one was it? So I managed to move my military pension into a SIP, and then I moved my SIP into Hargreaves Lansdowne, and then I moved into gold. I think it was Bullion Rock. Bullion Rock, was it? No. GLD. I think it's one of these, some sort of gold ETF or some. I can't remember. I swear it was Bullion Rock. Bullion Rock, I think. Okay, there's no search. No, it's probably not Bullion Rock Black. I can't remember. But yeah, there's literally a plethora of different things that you can invest in with your SIP gold-wise. So yeah, at the moment I've got mine in a crypto tracker. So thanks, Siam. Students at uni starting to learn about investing in general. What's the best way to develop knowledge? So I would highly, I guess this is the only plug and an unashamed plug, I would look at the WAP.org. Okay, and this is basically, you will learn everything your parents, schools and teachers and bosses never taught you, because if you just go to the WAP.org and look at the contents, WAP.org contents, click that, and then just look at everything you'll learn. Everything about setting up and running a business, growth mindset stuff, basics of investing, everything about money, property, future tech, and loads of other stuff. So this is basically what everyone should have learned at school but didn't. So definitely do that. It's cheap as chips as well. Freaking cheap. Oh, too cheap. Amazing what info. Oh, thank you, Stu. Much appreciated. What's your opinion on being 20% down as soon as you buy silver? I'm not fussed. Are platinum Britannia's worth it? No, don't buy platinum. It's not mandatory. It's not really a mandatory metal. And also, when the reaccountancy thing happens, platinum and palladium don't really follow suit. So, but yeah, you're not 20% down if you buy it from Coin Invest because it's VAT free. Other day we were chatting about pound cost averaging for those at the beginning of our wealth accumulation journey. Would you recommend the next 12 to 24 months applying any disposable monthly income into bullion, Bitcoin trading? I would, going back to the seesaws, I would not. So Hadley, if you're still here, are you still here, Hadley? Yeah, you are.
Yes.
Or anyone else? And this is a really good question, mate. So let's go back to this. So basically, one of the best things you can learn about investing is that everything is relative. And sometimes, and there have been times that I've got more of what I've wanted by not buying the thing I want. And I've acquired it via seesaws. So, for example, let's say your ultimate goal is to end up with as much freaking gold as possible in your whole life, right? So what most people would do is go, right, I'm going to make shitloads of money, then I'm going to buy gold. But there could be clever ways about it because there are multiple seesaws against everything, right? So for me, let's say gold was your goal, and obviously you have to start with a mission in mind. So what you could do is obviously, let's say you're going to focus on business, etc. And the reason you focus on business so you can control your income stream and you can grow your income stream. So business aside, what you could do, which is what I'm doing, is basically there's a seesaw between bullion and crypto. So you then have to say to yourself, well, okay, what is more likely to grow? Obviously they can all go down and up, but over the, let's say, a medium term, 2 to 10 years, what's more likely to go up the most? So you're thinking, actually, crypto's, it's gone up 9 million% in 11 years. So yeah, and Bitcoin is more, I'm more bullish on Bitcoin than bullion, by the way. So in this case, when you're looking at this seesaw between bullion and crypto, actually don't buy bullion. Okay, so first of all, you're going to buy crypto. Okay, obviously you can look at other seesaws. Okay, bullion against stocks, or okay, you could look at bullion against stocks. Okay, stocks probably. Buy bullion. Yeah. So in this case, I'm going to speed things up now. Yeah, buy crypto. But then, what sort of crypto do you buy? Bitcoin, or do you buy alts? So then you have to weigh up the pros and cons. Okay, what is likely to go higher? In that case, let's load up on altcoins, or let's just say Ether. So then, when you end up with multiple seesaws at the same time, so you have to keep track of everything. So what you then do is you load up on alts. So when that goes up and Bitcoin relatively goes down, you then exit alts into Bitcoin, and then you need to go back to your bullion. Can't type to CFX or cryptocurrency or Bitcoin, let's just say. And then when bullion does this compared to this, you then exit from Bitcoin into bullion. So what you'll end up doing is lots of different seesaws, but eventually you'll end up with your key thing. Does that make sense? Sorry, I've gone all over the place, but it's all about seesaws. And so for me, yeah, I'm constantly weighing up, stocks versus cash. In my opinion, over the next year, stocks are going to do this. So by default, cash is going to do this. But I'm not disillusioned, and I'm not ignorant to the fact that cash is being diluted like crazy with all the stimulus and eventual helicopter money that we'll see. So yeah, being in cash right now is a good idea, but do not stay in cash. So you're in cash, okay, stocks go down. So then what do? You could then just wait, and then when it's lower, then you just flip-flop, and then you buy stocks when it's down here. But I like to transfer assets. I like to, and then cash, and then look at other things. So yeah, that's a long answer. I'm really rushing through this. Is now a good time to purchase, or should we be waiting for more crashes to occur? I am personally waiting. So I'm actually not going to buy any more bullion. I've got my fill. I've got enough bullion. For me, I'm waiting for cryptos to fall, and I expect cryptos to do much more falling. is now actually a good time to buy. If you don't have any bullion, yeah, definitely it's a good time to buy, because like gold and silver will likely continue going up in the long run. And you have to, again, going back to the seesaws, we've already breached all-time highs with gold against the pound, but we haven't breached all-time highs with gold against the pound. So obviously you have all these seesaws of different currencies. I mean, there are many currencies around the world where gold is all-time highs now. So would you include storing in bullion vault in the list to avoid? My caveat here is that I would actually avoid the bigger companies. I just store it in a safety deposit box in a random company in your town. You need access to it. So yeah, any reason silver did not track gold recently? It's everyone's focusing on the monetary aspect of gold and silver, i.e. China buying gold, and basically the IMF is looking at re-evaluating gold. Or how do I explain this? So basically all eyes are on gold at the moment, because there's lots of chatter behind the scenes that they're gonna central banks, basically the Basel III. So the central banks have these Basel directives. Banks have the Basel directives. You have Basel 1, Basel 2, etc. And it seems like pretty much every 15, 20 years you get a new Basel directive. And the most recent Basel directive was that it moved gold from a tier 3 asset to a tier 1 asset. So previous to this latest Basel directive a few years ago, gold was worthless. But now gold has been moved up. It's a tier 1 asset in the bank's view. So it's as good as cash right now. It's as good as a government bond. So gold is slowly moving up through the ranks in terms of, and just look at what China and Russia are doing. That speaks volumes. Struggling to find any silver coins in stock on online sellers? Yeah, everyone's sold out at the moment. Gordon Brown was a massive before he even sold half our silver. Yes. Thank you, Siam. Presidentially amazing. Oh, thank you. Are you going to keep out stocks or keep trading? Yeah, I'm just still trading. I trade up and down. I'm not fussed which way it goes. I'm expecting it to go down. Would you say gold and silver always beats ISAs or just normal bank accounts? Historically, gold and silver has actually been going down. Like if you look at what's happened since 2011, it's been going down. But yeah, gold and silver, you shouldn't be in this for quick monthly plays. It's like you need a decade outlook minimum. Would you say gold and silver sorry, I've just done that one. How do I move my military pension into a SIP? I don't know if you can do this. I basically spent £1,500 to an IFA, who then said, sorry, you can't do it. I went to another IFA, paid about £2,000, and they went, oh, maybe we could do it. After lots of £2,000 worth of commission or fees or whatever, they managed to move it into a SIP, and then got him to move it to Hargreaves Lansdown. And then and I had to sign loads of things saying I'm not an idiot, I know what I'm doing, I know what I'm doing is costly and I shouldn't really be. I took loads of forfeits, but now I can control my military pension. Platinum is 5 times rarer than gold. Yep. Still not a mandatory metal. And maybe look at palladium chart, even more rare. Yeah, I mean, hell, look at rhodium, that's rarer, but still not the same thing. It's not part of the global monetary system. How far do you estimate Bitcoin to fall? Habib suggested 6,000. Yeah, I see 6,000. I'm personally thinking lower, but I don't want to give any price things. I hate that question. The second most hated question that I get is, name your top 5 cryptos to buy. I'm like, go away. Do you know anything about investing in precious stones, diamonds? So diamonds are probably one of the most abundant materials on the planet. There is like almost as abundant as sand. It's just that the De Beer family has a massive monopoly on it. There are some beaches in Africa where there are massive diamond stones just lying around on the beach, and they're protected and whatnot. People used to actually train birds to fly onto the beach, pick up a big old diamond and fly off. Now they shoot them down. So yeah, so the De Beers control the diamond market. That's why there's no real secondary market for jewelry and diamonds. Yeah. Off topic, what price do you see Tesla a buy at? Don't like buy questions, but basically when stocks roll over again, so if we look at the stock market, let's just look at the S&P 500, let's say. we're in this sort of pullback zone at the moment. Everything's been pumped, excuse all the lines, but this line here I'm seeing falling at least down to here. So when this falling happens, expect pretty much every stock that you hold dear to die with it as well. So when you look at Tesla's on a massive pump at the moment, which even Elon said is way overvalued. Yeah, I'm expecting this to go back down. So yeah, as I've said in previous videos, I'm looking around the 280 level for silver, for Tesla, or maybe 400 to 250, maybe something like that. So where are the questions gone? Questions are here. Off topic, blah, blah, blah. Not coloured diamonds. Yeah, just don't buy diamonds. I know you hate it and you never get to hold it. Yeah, so that's it. So this was supposed to be a 30-minute video. I'm actually really pleased that I did that overview at the beginning, because I know that not everyone will want to spend 90 minutes listening to my droning voice. I've got a sore throat at the moment. So yeah, that I guess is some of my gold and silver knowledge. Hope it helps. And this, I think, is it in a nutshell. Right, yeah, 90 minutes, let's call it a day. And thank you for your time. Have a good one all. Toodles.